I make it 2:30. The requirement of the question is to do a group cash flow using the indirect method. So I need to open up 4 pages. Operating activities, investing activities, and financing activities. The 4th page is, of course, workings. This is exactly what I would do in the exam. However small your handwriting is, however neat your handwriting is, use separate pages, please. Now, looking at the accounts, in the profit and loss account, we do have a loss, and the loss before tax is 21. Then we've got a tax, then we've got other comprehensive income, which is after tax, so we've got gains on financial assets and gains on property and losses on pensions. And then we've got our total comprehensive income, and it is allocated between the attributable to the parent and the attributable to the NCI. And so that information is given both for the profit or the loss for the year and the total comprehensive income. Then we have a SOSI. So when I'm interested in the statement of changes in equity, I shall examine the bottom of page 68. Note number 1, financial instruments. A little bit scary. I own some financial assets which have been classified as fair value through OCI. So either they have passed the cash flow test and the business model is to hold or sell, or they have failed the cash flow test as an equity instrument and I have made an election for it to be fair value through OCI. Either way, there's a story about fair value through OCI. I seem to have sold some, revalued some. There seems to be a tax issue as well. Note number 2 is about pensions. Pensions featured quite heavily in the last exam, but doesn't stop it coming up again. Note number 3 is a little bit more bread and butter, a little bit more normal, a little bit more plain PPE. And very, very kindly, somebody has reconciled the opening PPE to the closing PPE, but then there seems to be a little bit of a story around PPE. And that story involves a little bit of foreign currency. Number 4, there's an associate. So we have an associate, and there will be some cash flows to do with the associate. Number 5, there's an impairment test. So the impairment test has been carried out on goodwill, and this is the amount of the impairment on the goodwill, and this is the amount of the impairment on the other intangibles. Short-term provisions relate to finance costs. So I've read the question. Note number 1, financial assets. Note number 2, pensions, which is shown as a long-term provision. Note number 3, long story about PPE with a bit of foreign currency, weird stuff. And we've then got an associate, we've then got impairment losses, and we've got a provision for finance costs. What I need to be is calm and structured and keep making decisions. If I get 1 or 2 decisions wrong, it doesn't matter, just keep going. Alright, we're going to do this together. Now the first figure I'm looking for is profit before tax. But as soon as I look for profit before tax, I see that I have a loss before tax. How much is the loss before tax? 21. Profit starts off as a positive, loss will start off as a negative. Now the first thing I'm going to do is to look up, because there's a finance cost, because there's an associate, and because there's other income. So I have three weird things. I have the income from the associate. I have finance cost. And I have other income. Always add back your finance costs. Your finance costs are 9. Your share of profit of the associate, you are removing. Other income, you are removing. And the other income we are removing is 31. So these numbers require no working. I would not be writing this in blue if I was in the exam. I'm just trying to give you a little bit of side commentary that the items are in the P&L and you just reverse them out. I will look for a dividend income for investing. I'll look for other income as investing. I'll look for interest paid as operating. So I know that I will return to these three figures later. What next? Depreciation. Yeah, thank you. I think that's a nice, easy number to find. So let me see if I can find where depreciation is. And depreciation would appear to be somewhere in note number 3. I don't think it requires a big calculation or complication, because in that reconciliation I can see depreciation is 36. So I will add that back. Now whilst I am there, I do notice a disposal of 56, and I'm tempted. So we disposed of an asset with a carrying value of 56. Plant and machinery with a carrying value of 1 has been destroyed by fire. The asset's been replaced. I don't really understand what any of that means. That is something that gives me a bit of a headache. I'm going to have to come back to it. I'm looking for the disposal. Top of the next page. How much is the disposal? 63. What was the carrying value? Profit or loss? Sale proceeds were 63 and the carrying value was 56. So that's a profit. Yeah, it's a profit. And that's been included in admin, so we need to adjust for that. The proceeds were 63 and the carrying value was 56. So that is a profit on disposal of 7. Don't do a separate working. Don't open up a T account. Don't stress yourself out about it. Yeah, 63 minus 56. That's good enough. That's fair enough. That information has come from note number 3. Hang on a minute. What was that 63? Proceeds. Cash in or cash out? Operating, investing or financing? Investing. Now the risk is I get distracted. But if I can just see simple, nice, easy things, I'll grab at them. I'm in the middle of doing simple stuff in the reconciliation. So back I go to this reconciliation. I'm a bit scared about that insurance claim. I'm a bit scared about the foreign currency bit. I'll come back to them later. Let's just do some simple stuff. I've added back depreciation. If you go horribly quiet on me for too long, I'll start dealing with working capital, inventory, receivables and payables, because that's quite an easy thing to do. Have you seen any other adjustments that relate to non-cash expenses that have been charged in arriving at operating profit? We've added back depreciation. Have you seen anything else? Amortization? Amortization, impairment losses? Yes or no? Yeah, I think there is. If you look at note number 5, now I'm seeing it now, maybe you'll see it a bit later, but if you look at note number 5, it says there's been an impairment loss on goodwill, and the impairment loss on goodwill is 20. And there's an impairment loss on other intangibles as well. Add back the loss. Add back the loss. And the other intangibles is 12. Add back the loss. Now, I'm a little bit suspicious. Can we have a look at the opening balance sheet, please? How much is the goodwill at the beginning of the year? 100. How much is the goodwill at the end of the year? Make sense? Yeah? There's no acquisition or disposal of a sub, so the goodwill, which was at the beginning of the year as 100, is 80 because you've written off 20. How much was the intangible asset at the beginning of the year? 240. Look at the balance sheet. It's 240 at the beginning of the year. How much is it at the end of the year? Because there's been an impairment loss of? Yeah. I don't need to do a working. If the intangible asset had been 229, then I would have spent 1 buying an extra amount. Does that make sense? If the intangible asset at the year end had been 229, the 240, writing off 12 will give you 228. Or why is it 229? You must have spent 1. Yeah? So, but it's not there. I mean, I'm talking about things which just are not there. But sometimes that's what you do in exams. You're sort of making sure that you're not missing a trick. In a minute, I will do working capital changes unless somebody talks to me. Are there any other particular adjustments that you can see? No, fair enough. Fine. I like it. If you're not going to see it, you mustn't spend too long worrying about it. But just make sure you leave a bit of space here. Just make sure you leave a bit of space. Don't cramp things up. Yeah, I'd rather leave too much space than not enough. And we're now getting involved in our changes in working capital. So we're now getting involved in our changes in working capital. Now, our changes in working capital will involve something happening to inventory, something happening to receivables, trade receivables, and something happening to payables. Now, some of you may remember doing a question called Weller on the course, and that was an interesting question because we had bought a subsidiary and we had a foreign currency subsidiary, and that forced us to do lots of changes on the inventory, receivables and payables. But if I look at this question, note number 1 doesn't refer to inventory, receivables or payables. It's about fair value through OCI. Note number 2 is about pensions, nothing to do with inventory, receivables or payables. Note number 3 is about PPE. Note number 4 is about the associate. Note number 5 I've dealt with. Note number 6 is the finance costs are payable within 6 months. So actually, this question is stripped of and devoid of any major complication, it would appear. So looking at my inventory is 198. No, it isn't. My inventory is 135. So my inventory has gone down. So there has been a decrease in inventory. The amount of the decrease in inventory is 198 minus 135. 198 minus 135 is 63. If your stock goes down, is that good or bad for cash flow? So leave it as a positive. Receivables, looks like they're going down as well. Eight, 63, 71. If debtors are going down, does that release cash or absorb cash? It releases cash, doesn't it? It releases cash. Yeah, so that's a good thing. And payables, strictly speaking, we want our trade payables. Strictly speaking, we want our trade payables. And what is the amount of our trade? It's our trade payables. Our trade payables are 180, and then they become 115. So it looks like they are also going down. And the difference there with our trade payables is 65. The difference there with our trade payables is 65. And I'll come back and talk about that figure later. But when we talk about the 65, if payables are going down, is that good or bad for cash flow? Bad.